Welcome to the Daily Fortune, where we talk about the latest topics about finance and investment. But before that, please don't forget to click the like button, subscribe, and hit the notification bell so you'll know when we upload a new video. Now let's get started. In this video, we'll be talking about what Cathie Woods says about Tesla. Tesla stock is the biggest position in Cathie Woods' ARK Innovation ETF. Here is the summary of her interview, so let's get started. Cathie shared some key variables. 1. What market share of the electric car market do they think Tesla will achieve? They've anticipated, and it will be in the low 20s globally. It currently has a 60% share in the United States, according to Cathie. If Tesla will be the first one to succeed in autonomous driving in the United States, it may capture 20 to 25% of the total auto market in 5 years, and that will be in 2026. Also, Cathie was not concerned with what Elon Musk was doing, that he's been selling Tesla shares. Cathie said that Elon was only trying his options. There will be some tax consequences linked with his wealth management, so he's doing this to pay off those tax bills, and is making a big deal about it in his tweets to Bernie Sanders. He's talking about the rich paying their fair share, and Cathie thinks he's going to pay $20 billion when all is said and done this year. On the sell side, it is often referred to as a liquidity provider.
We have a 50% probability of success on autonomous. That's probably the biggest variable, I would say, or the most important variable to get it to scale to 3,000. Our confidence has gone up with this pilot test launching as it has. I think many people believe there are two places we could be wrong. One is the share of the electric vehicle market. And our confidence that Tesla's share is going to stay much higher than most people expected has actually increased because of their battery technology, way ahead of the competition, their artificial intelligence chip. No one has one. They're all relying on NVIDIA. And Tesla really is taking a leaf from Apple's book. The reason Apple left Nokia, Motorola, and Ericsson in the dust, this was their market to lose.
Portfolio management is the term for it. If a stock has performed exceptionally well in comparison to the other companies in the portfolio, take some profits and deploy them to undervalued or punished stocks. So a liquidity provider sells when others are enthusiastic about purchasing and buys when speculators, hedge funds, or other investors are just negative on a stock. That's how it works. Tesla is on the battery front, about 3 to 4 years ahead of Lucid and Rivian because of their creativeness in the battery space.
Is they defined the market incorrectly. They didn't understand that these were going to be computers in our pockets and that we would be able to access the internet. We think Tesla has done the same thing with an AI chip, that this is not just a car. In fact, it's not a car at all. It's a robot associated with sensors and battery technology and software as a service. So it's a real technology machine. So that's the one place. And then the second place where many people question our assumptions is on our gross margin assumption. Right now, we're assuming 30% for the auto part of it. But for the total company, we believe margins could move up to the 60% gross margin. Again, that's all about autonomous. So that again is the variable where we have to be right so that the margins move from the 20s now, the gross margins, into the 60s in the next 5 years.
They've introduced silicone into anodes, and they've been experimenting on ultracapacitors. Cathie has stated that artificial intelligence is heading its direction to transportation. If we go autonomous, neither Rivian nor Lucid have spoken about this with their management teams. Neither of the two are interested in pursuing autonomy at this time, so Cathie believes it's a rather narrow perspective on transportation. She said, quote unquote, and they will have niches, and given the Amazon-Rivian tie-up, it's possible if these vehicles become Amazon delivery vehicles that they will be able to collect enough data over time to become a part of Amazon's logistics network. but we doubt that they will become knowledgeable enough from a data point of view to be a fully autonomous taxi network around the country. We believe that Tesla's decision to design its own artificial intelligence chip was the real breakthrough here. Now, they designed it and the specs were out in 2018.
Well, inflation usually benefits value stocks, financial stocks, because interest rates go up more on the long end of the yield curve than on the short end. So financials have done very well this year. Energy year to date is up more than 50% in the stock market. Financials roughly 35%. Both of those benefit from higher inflation. A lot of commodities, for example, are in value indices. And so that just tells me that many people in the stock market do believe that inflation is going to be sustained. We do not, and there actually is in the stock market itself, within the stock market itself, there is some equivocation, because the top two sectors are energy and financials this year, but then we have defensives as the next two best performing. And so there's a little bit of uncertainty about whether this inflation is going to be sustained.
They've been collecting billions and billions of miles of data since then. The corner cases are what Cathie was actually interested in. Now here comes the entire self-driving pilot test. Tesla's test program has just begun, and it involves the safest Tesla drivers. From this, they needed a score of 98 or above, and this is what Cathie learned from them. She's learned that it's a dream when it works. It's incredible, but it's terrifying when it doesn't work. She even said that it was a near-death event for her. So Tesla is being guided by these extremely safe drivers. And whenever there is a miss, that miss will very often be just a pause due to uncertainty. They press a button and the video is sent back to Tesla so they can learn from their errors. So we can say that they have a lot of dedicated Tesla users out there assisting them with this autonomous effort. Cathie strongly believes that they will perfect it over time, and that more of us will have an experience in autonomous vehicles. Cathie also believes that the bulls are correct. The total cost of ownership of an electric vehicle is now lower than that of a gasoline-powered vehicle. They believe that with subsidies, the real sticker price of electric and gas vehicles will drop within 1 to 2 years or even sooner, and that electric vehicle prices will fall below those of gas-powered vehicles and will continue to fall. According to their current estimates, the average electric vehicle will cost around $15,000 by 2026.
Well, one of the reasons we do believe there's going to be quite a bit of commoditization, because by that time, we believe that autonomous vehicles will be taking off, and autonomous vehicles will be run in networks, autonomous taxi networks, so fleets. And so design is less important than the ability of these cars to get people from point A to point B.
And that's a summary of Cathie Woods' interview. Thank you for watching. So that's it for today. I hope you learned something from today's video, and to get updated with the next videos, don't forget to hit the notification bell. See you next time.